Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our Metals and Mining Conference. Our next live presentation is from Andean Precious Metals. Andean is focused on the sustainable production of precious metals with a silver project in Bolivia and a gold project in California. They were also named to the OTCQX Best 50 list of top-performing companies for 2024. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book Meeting in the top toolbar. At this point, I'm very pleased to welcome Juan Carlos Sandoval. He's the Chief Financial Officer of Andean Precious Metals, which trades on the OTCQX Best Market under the symbol ANPMF and on the TSX under the symbol APM. Welcome, Juan Carlos.
All right, very good. Thank you, John. Very excited to be here with you. Before I start, let me just say quickly, here with me is Alberto Morales. He's our founder, executive chairman, and CEO of the company. And Amanda Mallow, she's our director for investor relations. They're both here with me. So let's get started. Obviously, our legal disclaimers, as we might be making forward-looking statements. Let's get started. We always like to start with this slide, which talks about the history of our company. And I like to start it because it's a very compelling story. The company was founded by Alberto back in 2017. We bought from Corp Mining what it still is the largest oxides commercial plant in Bolivia. We bought that plant when it had a very short life of mine, less than a year. Actually, Corp Mining was going to disassemble it and leave the country. We noticed something that this made us decide to buy the company, and which was the location of the plant. This is a district that's very rich in natural resources. So what we started doing as soon as we bought the company was to not only focus on our own deposit, but also start buying more from third parties. And as you know, that it's a big mine district, and there are a lot of different players out there, hundreds of players out there. So we started buying more from the artisanal miners, cooperatives, and other private and public groups as well. Long story short, it became a big success. Fast forwards to now, we are still producing in Bolivia. We have been producing a very stable production rate of around 5 million ounces of silver. And again, it was a combination of mining from our own deposit and also buying better ore with better grades from third-party players in the region. That allowed us to, over the course of the year, to build a very strong cash position. As of 2023, we had almost $100 million in cash with no debts, no streams, royalties of balance sheet commitments. So we had a very clean, strong balance sheet and a good operation in Bolivia. But back in 23, knowing our strong cash position and being back then a strong buyer's market, it was a high interest rate environment, relatively low liquidity in the market. We thought it was the right time for the company to diversify itself, particularly from the jurisdiction standpoint. So over the course of 2023, we spent almost the whole year trying to understand the region. We mapped pretty much the whole area, the Americas. We looked at deals all over Canada, the US, Mexico, Chile, Peru. I mean, you name it, everywhere, right? It took us quite a bit of time, but at the end, we decided to pull the trigger on a gold-producing mine in California. Obviously important to say, this is a fully permitted mine, so really no issues with permittings. So we closed on the acquisition of Golden Queen, which is the name of the mine, in November of 2023. And I mean, what can I say? From a timing perspective, it was a perfect timing, because from there, where gold prices are right now. Putting things into perspective, when we negotiated the acquisition of Golden Queen, we used an average price of $1,900 for purposes of negotiating the acquisition. My budget for last year was based on a $2,000 gold price. And I've been selling my gold between 24 and 28, 2,900 where it is right now. So I'm getting $600-700 of additional revenue that I had not foreseen. So from the timing could not have been better for that acquisition. So right now, where do we stand? We have two good producing assets, cash flowing. We produce around 5 million ounces of silver in Bolivia, constant, very stable production rate, and 60,000 ounces on average, I would say, of gold in the United States. All of this, we were able to build, and I will explain this a little bit more in the following slides. We were able to make this acquisition, and I'll actually move on to the next slide. I like this slide very much because we basically, thanks to this acquisition, we were able to double the size of our company, in pretty much every metric possible: revenues, cash flows, resources and reserves, employees, and obviously locations. All of this while keeping all of our, or most of our cash, and zero dilution to our shareholders. How did we accomplish that? I mean, it was a combination of how we agreed on the purchase, Golden Queen purchase price, with some deferred payments, which I will explain a little bit down the presentation. But like I said, we doubled the size of our company while keeping all of our cash. We still have a very strong balance sheet. Now we have two good producing assets in two different jurisdictions. One in the U.S. Despite what people say of being in California, this is a fully permitted mine. It actually works really well for us. And I will explain, I'll go into the details of that asset in a bit as well. So yeah, really, this slide explains what has happened with this company over the last, I would say, 16 to 18 months. Our headquarters is in Monterrey, Mexico. Our founder, Alberto, he's based in Monterrey, Mexico. We have our assets in the U.S. and our assets in Bolivia. Thanks to the acquisition of Golden Queen, we have significantly increased our reserve base. We have a little less than 500,000 ounces of gold. We have close to 12 million ounces of 2P reserves of silver with some bark. I guess the question is, where do we stand from there now that we have two good producing assets, cash flowing, and a strong balance sheet? Well, we will continue to grow organically. I think one of the reasons why we acquired Golden Queen is the potential that it has, not only to improve its operation, but also to expand it through an exploration campaign that I will announce in a bit. But also thanks to our strong cash balance position, I think we're well positioned to probably keep growing the company through another M&A acquisition. And I'm also going to talk about that in a minute. Let's go into our first asset, which is Golden Queen. Like I said, we bought it in 2023. The acquisition price for that company was $65 million. But interestingly, the way we agreed on the payment terms, we were able to keep most of our cash. How did we do that? Out of the 65, we were going to give the seller $50 million in cash because they needed to take that cash and repay what it's called a COVID loan, which is one of those loans funded by the U.S. government in 2021 during the COVID period, and that was to support U.S. companies. And Golden Queen had this very cheap loan. It's cheap money because it's funded by the U.S. government, and because of the change of control, they needed to repay that back. But when we analyzed the company, we realized that was very cheap money. So instead of us paying that money to the sellers and the sellers turning around and paying it off, we went straight to the Fed. We talked to the Fed, and we explained who we were. We requested the change of control, and long story short, they accepted that change of control. So I kept my $50 million, and I kept the very cheap loan, which I still have. Since then, since November 23, I have been paying it off as planned. So it has come down from 50 million to a little over $35 million. But it's cheap money. It pays SOFR plus 3%. So I'm trying to keep that loan as long as I can. And then the remaining 15 to meet the 65 million, there were 3 payments of $5 million each. The first $5 million was paid on the acquisition date. Fortunately, Golden Queen had close to $5 million in restricted cash backing a reclamation bond, which, thanks to the strength of our company, within a short period of time, we were able to release that. So really, on day one, it was almost cash neutral for us. The second payment of $5 million, which was paid last November, like a year from the closing date, it was really paid with the excess cash flow that we got from Golden Queen, mostly thanks to a combination of very good commodity prices and also the improvements we have done at the site. And the third payment of $5 million, which was due in November of this year, because of the working capital mechanism and how we agreed that with the sellers, we only and we've already paid that, so we're out of any liabilities with the sellers. So again, it has been a great acquisition. Timing could not have been better. Like I said, we are selling right now our gold at $2,900. When everything was based on a long-term price of $1,900. More specifically to the operation, there were several reasons why we were interested in this company. One of them is we identified a lot of opportunities to optimize the site. There was for several years there had been a lack of proper investment in the company. As we announced during our third quarter numbers, we invested close to $30 million last year from our own money into Golden Queen. That was something that we knew we needed to do, but that money has been spent already. So this year we expect a more reliable operation, right? Better production rates, better profit margins, and we have also embarked in a very detailed mine and plan optimization plan. Actually, there is one slide. I'll go into that slide. I'm not going to go into all of them, but we have identified certain things from a mine and plan optimization that we are already well underway, and that should also help increase production and improve our margins. Slide quickly, because as you can see, Golden Queen has a life of mine of 5 years. Some people might think that's a short life of mine. We understand that we need to extend that. Last year, and that's another reason why we decided to buy this company. Golden Queen has a very good exploration potential. There were some veins identified that had never been really explored. Last year, we started an exploration campaign. We allocated a couple $1 million into that plan. Actually, a couple of weeks ago, we issued our first press release on the first results from the assay labs we got from that first phase of the exploration campaign. And what I can say right now, it looks very promising. Basically, it's showing the continuation of the mineralization. So that's very good news. I expect this year that we will be making further announcements on the progress of our exploration campaign. All of this with the objective of extending the life of mine of Golden Queen. We are optimistic that this can be achieved based on the results that we're finding, and we will be announcing them to the market this year. All right, moving on. This slide is important. As you can see within our boundaries, that's where you can see the veins of the one that had not been previously explored by the previous owners. And like I said, what we're getting, feedback that we're getting from the first assay labs are very encouraging. And last, it's a standard heap leach Merrill-Crowe process, something that we know very well, and the optimization plan is well underway. We will be announcing our guidance the second week of March, but I think Golden Queen should present a pretty stable production, which will benefit from current gold prices. Moving on to our, I would say our flagship asset, which is Bolivia. Again, we have been in Bolivia for several years now. It has been nothing but a great business. Like I said, we were able to build a very strong cash balance, close to $100 million in cash. And that allowed us to buy Golden Queen and buy it at the right time, like I said. What's important in Bolivia right now is, and I like to classify it that way, Bolivia, our asset in Bolivia, we are no longer a traditional mining company. And what do I mean by that? When our founder bought the mine, as I said, it had only less than a year of life of mine. We were able to keep it running for several years. That in addition to the acquisitions that we were making from third parties. But back in 2023, in December of 2023, we ultimately, yes, decided to stop mining from our own deposit called Payacos. The reason for that is that it was really getting to be very low grade. We weren't really making a lot of money from our own deposit. And we wanted to free up that capacity from our plant to get better ore from the third parties that we were getting, right? And like I said, Bolivia, it's all about the location of where we are. We are in the what it's called the Cerro Rico area. This is a site where they've been mining for over 500 years. So nobody doubts the potential that the region has. So we stopped mining from our own deposit. We released that spare capacity, and we started buying even more from third parties. So we're getting better ore with better grades. That allows us to get better recoveries. And again, this is a business model that has worked extremely well, right? Over the course of the years, every year we've been able to have a very sustainable, very stable production profile of around 5 million ounces of silver. Now, the benefit of, as I said, we are more, instead of being a traditional mining company, we're more of a processing facility. It allows me to have stable cash flows, meaning when prices go up, yes, I'll be paying a little bit more for the ore, but you always go for that refining margin, right? And it's the same way when prices go down, I'll be paying less for the ore, so I'll still have that margin. So it's a lower risk type of business, and that business model has worked extremely well for us. An important point here, you can see that we have 4.6. That is a little bit less relevant in Bolivia. Why do I say that? Because those 4.6 years, that's only in relation to what we have under long-term purchase contracts, right? But that's only part of what what beats the plan, right? We do a lot from short-term and spot purchases, and there's a big logistics behind it. We have a dedicated team scouting the area. It's not like we're waiting just to see what comes. No, we have a very good understanding. There's a big logistics, and a lot comes from those spot purchases. But if to give you an example, if 50% is coming from third-party spot purchases, then those long-term contracts, which is only 50% of what feeds the plan, those 4.6 years could easily double. So that's why I say the life of mine is less relevant in Bolivia. All right, moving on. We also, about 2 years ago, decided to start reprocessing our tailings. It's low grade, around 50 grams per ton, but it's cheap, right? It's right there. We just have to send it to the mill, and this allows me to also improve the overall efficiency of the plant. We started late last year. We expect this year to start getting more production from our tailings. As you know, there is the initial layer is extremely low grade because that came from the lowest mining activity from our own deposit, which was already very low grade. But once we get into the lower sections, we will be getting more from our tailings reprocessing. And overall, this will enhance the overall performance of the plant. Again, like I said, it's all about the location of where we are. There's hundreds of different players out there where we can buy the ore from, and we have been able to secure different contracts as well. A couple of weeks ago, we announced 2 new contracts, one for 100,000 ounces and another one for 250,000 ounces. And we will keep trying to secure more contracts like that one. This is the region of where we are. And like I said, there's hundreds of players where we can buy the ore from. It's a little bit of the same thing on this line. Our sustainability, we're a very conscious company. In Bolivia, we contribute a lot to our communities. A big chunk of the city of Potosí, which is the town right next to our plant, a big chunk of their economy depends on our plant, on our company. We do a lot of social working. We have good relationships with the communities down there. It's an integral part of our company. And also talking a little bit about Bolivia. Bolivia for us has been a great business place to work with. Like I've always said, whenever you invest in a country like Bolivia, where for many investors and even banks, it's sort of like a no-fly zone. You always need 2 things. You need certainty. You need to be able to work with the government. They need to allow you to work, meaning there's no changing laws, no expropriation threats, no changing tax codes. From that perspective, Bolivia has been very stable, actually even better than many of its neighboring countries. And the other one, which is probably as important as the first, is that there are no currency controls. I mean, we pay our taxes, we contribute to the communities, but we can get our money out. All of our cash right now is sitting in brokerage accounts in the U.S. and Canada. So no issues. And there are some neighboring countries that basically you can't do that, right? So considering those 2 aspects, Bolivia for us has been a great, a place to do business with. And we will continue to work in Bolivia. We will continue to cash flowing, we have very stable production, like I said. So overall, Bolivia has been a great investment site for us. This slide is very important. We are very unique from the shareholder standpoint. Our founder, like I said, he's still very committed to the company. He still owns around 54% of the company. Eric Sprott, who probably you know very well, he owns 15% of the company. Between those two, they own close to 70. The rest is floating on the market. But that tells you that you have two strong, very committed shareholders. They've been very committed since the day we took the company public, and then the rest is floating. We know that the float. We need to eventually increase the floating. We are trying to get to the right valuation in order for both our founder and Eric to be able to, lower their exposure, bring more float to the market, and we are getting there. The truth is that we are still, we believe we are still very cheap. First of all, we have two good producing assets cash flowing, but we're trading at around 2 times cash flow. I'm trading at around 150 million, roughly US. And so that's like 2 times cash flow. Everybody else, or most of our peers, are trading between 4 and 8, I would say. I would say there are two main reasons for that. For why are we cheap? One is I think there is a lack of understanding still of our company. We are no longer a small single asset Bolivian company. We have two good assets cash flowing and producing, one in a very good jurisdiction as the United States. And the other one is I think it's the life of mine. As you saw, we have a relatively short life of mine, but we are quite confident, comfortable that with the exploration campaign that we have at Golden Queen, we can extend the life of mine for a couple of years. Like I said, just a few weeks ago, we announced the first results of the first phase of the exploration campaign, which essentially confirms that the continuation of the mineralization. So I think we're quite comfortable that we will be able to extend the life of mine at Golden Queen, and that should position the company well to be able to increase the valuation to where we should be, which is like 4 times at least. I'm being told that we're running a little bit of time, so I'll just go ahead. I don't know. I guess I'll open it for Q&A if there's any.
Okay, so the first question here is, what is the all-in sustaining cost for your 2 mines?
Yeah, good question. So the all-in. Let me start with the operating cash cost at Golden Queen last year, and this is all going to be confirmed as of what I can say as of third quarter of last year. We had an operating cash cost of around $1,500. Cost goes up to around $2,000. Why such a big difference? Because, like I said, we needed to invest a lot in Golden Queen last year. We invested close to $30 million. So that takes my all-in sustaining cost to around $2,000. All these numbers will be confirmed when we present our year-end numbers during the second week of March. Again, even if the all-in sustaining cost goes to 2,000, we've been selling our gold at 20 on average. I think last year was $2,400. Right now we're selling at almost 29, so there is a good margin there. And Bolivia, that's a bit different because last year we decided to change the metrics of how we to show the performance of the company. Instead of showing an all-in to a gross margin ratio of 20%. So at least on every purchase that we make in Bolivia, we try to get at least a 20% margin, and that's because of the nature of the business. So
we're at the 30-minute mark, so if we didn't get to your questions, I will answer you personally, and we'll get back to you.
Perfect. I think that concludes, guys. Thank you very much. Our presentation.